Great, thanks. So first and foremost, thank you to DFIN and Workiva for tagging the 3 sample ESG documents that I'll be using for today's demo. So my goal today is really to demonstrate the benefits of standardizing and structuring ESG data and show how it can be used in conjunction with financial data that is already being tagged with XBRL. So I will start off with showcasing the 3 inline ESG documents tagged by DFIN and Workiva, and then I will show how linking ESG data to financial data and disclosures can provide additional insights. And then finally, I will be showing some early examples of companies disclosing the human capital risk. So what you see in front of you right now is the Novo Nordisk ESG disclosure that was tagged by Workiva. And you can see that this is the inline filing, and around certain data points, you'll see little red lines around that. What that means is that this particular document has been tagged using XBRL. So what is nice about inline, as Mike mentioned before, is that it gives the human the ability to look at the document, but underlying all of that is actual data that allows the human to also do data analytics with it. So as an example, if you're looking at Novo Nordisk's product recalls, and they're talking about how they've had 4 product recalls from the market, and because that data point's been tagged, I can simply now click on that and see the nice time series. Real time, so I'll just quickly run by this and then do the comparison for the number of employees with Magna International. Click refresh, and now you can see literally the data, updated in real time, being able to do that benchmark comparison. So now you see this, right, Michelle? This is all real time?
Yes, that's great.
Okay, fantastic.
Thank you.
So I apologize for that. I didn't realize that it was on pause. Now moving on to Telefónica's inline document, you can see here that Telefónica has a nice time series for total energy consumption and measured using megawatt hours. So if I click on that, you can see this really nice time series here for Telefonica for their total energy consumption. Now again, I'm working with the other 2 ESG documents that were tagged by DFIN and Workiva. I had to kind of find a company, Magna, either Magna or Novo Nordisk, that disclosed this. And so Magna, in fact, disclosed this. I'm going to benchmark now total energy consumption for Telefonica against Magna. So if I click refresh, you can see that now I can overlay, right, or benchmark the energy consumed between Telefonica and Magna. And you can see that Magna obviously only disclosed 3 years worth, so I was able to benchmark for 3 years. Now, if I wanted to benchmark the percentage of energy from renewable sources, if I click on that, you can see there's a nice time series for Telefonica, benchmark that against Magna, click refresh, and you'll see that Magna doesn't pop up on the graph. And that's because Magna didn't disclose this in their particular ESG document. So again, this just to re-emphasize the point again that it's important for us to be able to have standardized metrics so that we can compare across companies and do the kind of benchmarking that I've been able to show you. Moving on to the next example, I'm going to look at Magna's ESG disclosure that was tagged by DFIN. And what's really interesting here is that, they have a whole section here that talks about product safety. And, Magna is at risk for product warranty costs, and which includes product liability and recall costs and so forth. So there's a whole lot of qualitative type information here. But what Magna has also done is that they pointed out that in 2019, they have a warranty accrual that increased by 44 million, and they actually make mention of the note 16 in their consolidated financial statements. So here is the interplay, the connection between ESG disclosure and financial data, which I think is really powerful, right? Now note that this data point was tagged, so I'm going to click on that. It gives us a very nice time series of the warranty accrual increase. And this is for Magna. Now, when I click on the second tab, you'll see that because this is in fact a US GAAP concept, DFIN had tagged this using the US GAAP element right up here. And what is also interesting is that within the company's SIC code, there are 77 companies, nearly 20% of their peers or their competitors also disclose this. And who are they? If I click on the view here, you'll see that these are the companies that have used that same tag. So let's go back now and benchmark this particular warranty accrual increase to some of these peers. I've already selected 2 of these companies. I'm going to click on refresh. And so now we can actually line up the warranty accrual increases and benchmark across these 3 companies, Magna, Allison Transmission, and American Axle. But what if I wanted to add another company? Well, the fact is, because this data has been tagged in XBRL, I can do this type of analysis on the fly. So I'm going to click on the second tab, and I can see that Borg-Warner is one of the other peers that uses this tag. I'm going to simply just type in here Borg-Warner, and I'm going to click refresh. And there you see the data come up in real time. So I think the takeaway from this last use case is that when you have ESG disclosures and financial disclosures being tagged in XBRL, to go from an ESG disclosure into sort of financial analytics, as is the case here, it's a very seamless process, right? So what I'm going to do now is actually expand on that concept. Now, most of you would know that the SEC has required companies to tag their footnotes using text blocks XBRL for the last couple of years. So following from that example, we're looking at warranty accruals, right? So remember, we started off with an ESG disclosure looking at product recalls where the company talked about warranties. And now I'm going to drill into the warranty accruals. So I'm actually going to do a textual search for this. I'm going to search on warranty accrual or warranty obligation. I'm going to limit my word search to 3, so which means that these words have to be within 3 words of each other. And following on from that example for Magna, I'm going to select Magna's industry. So I'm going to type in Magna here. Go to peer group, pull up the 77 companies, and now I'm going to execute this text search, right? Again, this all started with looking at the ESG disclosure. Now that pulls up 32 of these companies that have some mention of warranty accruals. And actually, let's just focus on Borg-Warner, the company that we had benchmarked Magna against before. So now I'm pulling up Borg-Warner's product warranty footnote. Click on that and you can see this is Borg-Warner's warranty footnote in their 2020 Q3. And here is where the interconnection between the ESG data and the financial data can really help us gain insights, because now I'm already looking into the financial data, right? The detailed financial data that started off with looking at the ESG disclosure. And so now by selecting this little box up here, I can now start visualizing some of these financial data that now we can compare between Borg-Warner, and if we wanted to compare that back to Magna, we could. How do we do that? Well, I'm looking at the warranty accruals here for Borg-Warner. I'm going to type in here Magna International, click refresh, and now I see the warranty accruals for Borg-Warner and Magna lined up next to each other. Now, there was some discussion about Magna paying, increasing its payments on the warranty accruals in the ESG disclosure, and I see the data point here. I'm going to click on the payments towards the warranty accruals, and this is for Borg-Warner. But again, I can benchmark it to Magna, click refresh, and now I can see that data point lined up with Borg-Warner. So again, the takeaway from this is, it's very seamless with which we can look at an ESG disclosure and then transition very easily into financial disclosure. And I think the ease with which we can do that is because the ESG and the financial data have both been structured using XBRL. Now, going back to the Telefonica example. So if we take a look at this, Telefonica example here. Telefonica disclosed the percentage of energy from renewable sources. And if you recall, I could not benchmark this against the other 2 companies because they didn't disclose it. But wouldn't it be nice if we could correlate this ESG metric to some of the financial metrics for Telefonica? So let me show you what does that look like. So I'm going to pull up this data visualization application. I'm going to type in here Telefonica. I'm going to pull up the energy consumed percentage, the data point that was tagged in the inline ESG document. And I'm just going to pull up one of the KPIs, operating expense as a percentage of revenues. And for fun, let's just type in earnings per share too. Now I'm going to click refresh. Okay, so this automatically defaults to a combo chart, but as a user, I can now sort of play around with the data and repackage the data in the way that I want to see it. So for instance, let's say I wanted to look at the operating expense as a percentage of revenues as a line graph, but look at earnings per share and the percentage of energy consumed that is renewable as bar graphs. I can see very clearly here that this percentage of renewable energy consumed has increased over time for Telefonica. Correlate that and put that next to earnings per share. Earnings per share has also increased from 15 to 18, but it declined in 2019. Now, if I overlay that with operating expenses as a percentage of revenues, you can now see that, okay, the increase in energy consumed, renewable energy consumed, has increased from 15 to 18, and that is correlated with, a decline in operating expenses as a percentage of revenue, but that has increased in 2019. So again, this is all very high level type analysis, but it shows you how once ESG data can be overlaid with financial data, that it allows the investor or the analyst to be able to really dig into some of these interesting correlations that might exist between the two data sets. So that's that example. Now, as I mentioned before, human capital risk has been on the top of a lot of people's minds. And so I just wanted to quickly show you this PowerPoint slide of the analysis that we did that I mentioned before. As I said, here's the distribution in terms of what companies are talking about as it relates to human capital risk based on the initial 10Ks and 20Fs and 40Fs that we're getting this year so far. And you can see that one of the key areas that companies are talking about is this, attracting, training, and retaining employees. And more specifically, they're talking about employee turnover. So what we did is I kind of was curious about that. So I wanted to look at some companies and how they're talking about employee voluntary turnover. And this is also something that the SASB has included in its human capital bulletin. So let's take a look at some examples. So I did a search of voluntary turnover, and I'm going to click on this card here. Now, when I click on the icon up here, you can see that I literally just searched on voluntary turnover. I've searched for all companies for the period 2020, and I'm limiting my search just to the business overview section. And when I unfilter, you can see that of the 187 or so companies, 12 companies mention specifically voluntary turnover in their business overview section. Now, if we take a look at the first company, Coherent, it will pull up the business overview here in the middle section. And on the right-hand side, you can see the highlights. Now, you'll notice that with Coherent, they actually specify that their voluntary turnover is 5.2%. So if I click on that, you can see exactly where they talk about it in their disclosure in the middle here. Now, contrast Coherent to Shift Pixie. If I click on their business overview, you can see on the right-hand side here, the highlight where they talk about voluntary turnover, and it's more qualitative, right? So they mention that they have a low level of voluntary turnover. And when you look at the 12 companies, that's sort of the mixture, right? You've got half of the companies approximately that mention or disclose specifically the percentage of employee voluntary turnover, and just slightly more than half of the companies talk about it in a very qualitative sense. Now, as I was listening to John speak before, I'm obviously an advocate of companies disclosing more quantitative metrics so that we can actually structure that data and show the capabilities of correlating that data to other financial data. So for the few companies, and I'm working with a very limited set here, for the few companies that did disclose employee voluntary turnover percentage, what does that data look like? So let me take a look here. I was able to plot that, and I created a chart that looked at employee voluntary turnover percentage, and I correlated that with a financial metric. So let's take a look at what that data looks like. I'm going to put on the x-axis the employee benefits and share-based compensation. And obviously, because I'm working with a very limited set, they come from different companies, come from different industries, different sizes. So I control for size by scaling or dividing employee benefits and share-based comp by percentage of total assets, right? And so here, when you've got on the x-axis, the employee benefits and share-based comp as a percentage of total assets, and on the y-axis, we have voluntary turnover rate. You can see, even with the very limited data set here, that there is a negative correlation, right, between these two metrics. And this is consistent with, what I would expect, right? Companies that have lower voluntary turnover rate tend to pay their employees more, right, in terms of share-based comp and other types of benefits, and that's what is, that is exactly what I would expect. And again, I mean, the caveat here is I'm dealing with 5 companies, so we can't really extrapolate too much, but from the very little data points that I have, we can see some sort of correlation here. So the point is, imagine if we had a lot of this data, and imagine that we could compare these two metrics across hundreds of companies or thousands of companies. We would be able to get a lot more insights from the data than we could now with this very sparse data set. And the beauty too of structuring data is that because all of this is now structured and machine readable, it allows us to do things like, as an analyst, be able to dig into the data points. So if we look at Coherent, I'm curious about their 5.2% employee turnover rate. I can now click on that data point and go back to the narrative disclosure, right? And see how they're talking about this 5.2%, which they say is substantially less than the benchmark data right here. And so I think the big takeaway from this is that when you structure ESG data and using XBRL, specifically the SASB's taxonomy, and you overlay that with financial data, it allows investors to be able to move seamlessly between ESG disclosures and financial disclosures, but also be able to overlay the ESG data with the financial data very, very easily, as hopefully I've demonstrated today.